Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday, March the 7th. This will be our chart lesson for today. I'm doing this one a little bit early. It's just a little before noontime today, but I'm done. I'm not trading anymore. There's not much happening today. We've got kind of an upward working channel, I believe, here, and the upper side might actually be right across here. Um, but at some point we could break out and go higher, and if we do, I would look for possibly this to be your upper trend channel. It's hard to tell at this point. What I can tell you so far is that seems to be the highs right there since maybe 9 o'clock or so, working off that channel there. Definitely, no doubt, we've got this low trend line working up through here. That's pretty obvious. Where we're going to end up in the upper side is hard to say, but there's just not much volume today. You can see there's not as many bars where prices are really not going anywhere. And probably what's going on is today is the start of rollover, where we're rolling out of the March contract into the June contract. And a lot of people will not trade during rollover. They'll take a couple of days off or won't trade. I'll generally still trade, but I'll go ahead and open my other chart up. And people always ask me, when do you flip over? I don't have any specific rule on when I flip over. I just go ahead and open the other chart, and I'll show you. There's today's chart, or the June chart, and you can see there's no volume in this chart. Nothing's going on there, so there's no way to trade that at all. So I'm not going to waste my time with it. So I will stay with this chart until I start to see all the volume in this chart. So I always open the new chart up the same day it says today's the first day of rollover. So I'll open this new chart up, and I'll just look at each chart. I'll leave them both open till most of the volume's over in the June chart or the next month, and then that's when I'll start trading that month. So, at any rate, let's talk about the trades today. We've got what I call a thin spot through here where really prices are working both sides. And, this could really go, it could be a tick or so in either direction. And that's what I call like a thin spot, or prices it's acting as support and resistance. We're really getting the main resistance up here. And I would actually say should be right there at this point. That's where we're getting the serious resistance, but we got this area right here where we're working both sides, and you can see prices working both sides of that line, and a lot of times you can see that, and this is where you got to be careful entering in this middle part. You want to enter off the lows down here or off the highs up here, and really it's an uptrend. It's kind of a wedge pattern shaped uptrend. I don't even think I'd call that a wedge, because if you drop this down, you can see we're clearly working that channel right there, and have been since maybe just a little bit before 9 today. So that's what I'm working off of, is this trend line and this channel that's going up through here. I did take one short here earlier in the day because we had this double top. This goes into yesterday. We had resistance there, and then we broke above it, made that little trap right there and turned down. So that's a great place to go short. When it went higher first and then turned down, go ahead and put your stop order, and you notice it ticked right through it. And easy scalp. He didn't get anything more than that, but easy scalp. And then, of course, now you're coming off the low side, and place to go long here. What I recommend, notice that it's a doji, but it's a larger doji, but it was just like a tick. I mean, that could have closed either way and could have easily closed on its high. So what I'd recommend is, if it's a little high or a little far away from the entry point where you put your stop area, you might just drop a limit order right there on the top, or maybe a tick in, and you can see that would have worked. Sometimes you'll get left behind doing that. But here's a good example of one you get left behind over here by doing that. But most of the time it will work. And you might be better off to get left behind than to enter at the wrong place and not quite get 5 ticks. And here's a good example that we'll talk about in a minute. But anyway, this is a double bottom. It's a possible trend line coming up through here. A couple of different things, different reasons. It's a two-legged move down to second entry long. The only thing I didn't like was it looks too much like a doji, but notice that it traded way down here, but then closed almost on its tick to its high. I mean, it could have just as easily ticked up and closed, and it would have looked, like like a reversal, a nice reversal bar. So it would have looked just like that one, basically, if it would have closed on its high instead of closing on the, it didn't close on the high side, it closed down. And like I said, all it takes is one order at the right timing to make it close, and your bar might even have closed on the high and may look like more like a reversal bar, like, where'd that one go? Oh, this one right here. There we go. So anyway, nice long right there. Easy scalp. Again, nothing more than that. And then we pull back, and guess what? It bounces again, another reversal bar. You go long right there. And this is a good example of why you can't always, sometimes it's detrimental to scratch out because your stop goes below this signal bar right down here, and it looked like it was going to reverse. So when it closed almost on its low, so if you scratched out, guess what? You scratched yourself out of a perfectly good trade. And, what you might do is, instead of going long way up here and having so much risk, is drop a limit order, a tick or two in, and hope you get filled and see what happens. Again, you might miss the trade, but sometimes that's the better move. And then this one right here, you see how big this reversal bar is. You want to get in as close to the support area as you can, but you got to follow the rules, and so prices had to tick up. So again, you might have dropped your order a tick or so into this bar because it's really big. And either way, even if you didn't, it still worked as long as you had your stop below the signal bar. You see it pulled back, but it kept working, and your stop never would have been hit. And you could have ridden it any of these you could have ridden all the way to the top as long as you kept your stop where it's supposed to go, which is below the signal bar. And I didn't like this entry right here because notice all these overlapping bars, the dojis, and this one closed in the middle. Again, you might have thought about entering this one if you could have got in way back here. But I didn't like this. It's too close to the highs there. We'd already turned down once. So that's the reason I didn't circle that one. It was better to wait until we had a failed second entry short, which is a trap. And so when this next turn down, and then it's a failed second entry short, now you got a trap before you go long, and you got a little more room too because this got you in at a little better location. And you see that one worked, and that's because it was a trap and it hit all the stops. And then again, I really didn't like all these. There was another similar trap right here, but look, you got to go long up here at the highs, and that's just, you're just asking for trouble. And you see what happened. It broke up and turned and went straight down. And so then finally we had one more little bounce here, but I didn't like this one because, again, it was similar to this one. There's too much overlap. Big doji, 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 doji. That's 4 dojis in a row, and there's a good chance we're going to break out of that and snap back. So the only way you could have taken this one, and that's the reason I marked it in green, was to try to get in closer, dropping a limit order here or here, and you probably wouldn't have got filled here. You would have here, and that would have still given you 1, 2, 3, 4, just 5 ticks, just enough to get out, and then it turned down. But assuming you did risk it and go long right there, you can see it only went a couple of ticks, and then it turned down, and there's a really bearish bar. You only got 2 options. You keep your stop right here so you don't lose much money, because really you only got, if you entered here on a stop order, then you got a 1, 2, 3, 4. That'd be a 5-tick stop. And you see now you're getting a chance to probably get out at scratch, maybe even a tick or 2, or it may go higher because now you got a failed second entry short. But again, it's another doji, so it wouldn't surprise me if they don't run the stops down here and then maybe go longer, or it wouldn't surprise me if we just sell off from here and this turns out to be a trading range day. That wouldn't surprise me at all either. So, but anyway, not a great setup. And for the reasons I explained, there's just too many overlapping bars there. You're better off to wait till you get this failed second entry long and a trap. But generally, you want this bar to be more bullish than that after a trap. So I still don't really like it unless you're trying to get long way down here. And, you know, you might even think about getting long with a limit order here. But I wouldn't do that this close to the high. I just don't like it. I'm thinking we're probably going to work higher from here. But we'll just have to see. But that's pretty much it today. And I'm not going to do much more than that. Again, it's rollover time, and there's just not a lot of volume. People are busy squaring up the end of the quarter, the end of the contract, so to speak, and getting ready to, and that just takes a lot of the volume and the momentum away while they're switching contracts, because even though the trend may be up, if they're mostly long, they've got to sell to buy to get out of this contract, and it just kind of throws the momentum off, and you kind of get days like what you're seeing right here. So you might consider during the first day or two of rollover just taking a day off, or just watching it, seeing what you can do, and trading what's there and moving on if not. So but I'm going to wrap it up and keep this one short today, and it's a nice day out. I'm going to just get out of here early today and go enjoy the day, and I encourage you to do the same if you can. But we'll do this again tomorrow, and we'll be back. Tomorrow will be Friday, and wrap up the week. It's been a good trading week. It's really been a good trading month. But today's the first really kind of yucky, not much movement, real choppy, not much going on kind of day we've had lately. So, but no matter how you look at this is a choppy uptrend. And so I had a couple of emails, people saying, I just don't get it. What's happening today? Well, as long as you're making higher highs and higher lows, you're trending up. It's not a strong trend. It's not moving a lot, but it's still a trend. So, but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.